Hello everyone and welcome to another installment of the JobKeeper videos. What I've done is I've kept this one till now because I was waiting for the alternative tests of the JobKeeper to be released by the Treasurer and the ATO. That's been established this week, so I'm happy to give you some more information about that. So here we are, early October. So what you should be doing now is you should be filling in your declarations for your JobKeeper for the phase, or the JobKeeper 1, let's call it, and putting in your September turnover to get your JobKeeper money for the September fortnights. So that's what you should be doing now if you haven't done already. Fill them in. So next thing we're going to do is just know that now that JobKeeper in its first form, let's call it JobKeeper 1, has now concluded on the 27th of September. So although it is the same legislation, JobKeeper is JobKeeper, we are getting this call for calling this new one JobKeeper 2.0. So if it's okay, I'm going to refer to it as JobKeeper 2, and we'll just go through that and looking at eligibility and some things that I just want you guys to be aware of. I'm not going to go through in total depth because it'll bore the hell out of you. Secondly, it gives you an idea to, if there are some pressing issues, to contact me and I can step you through them to make sure that you're doing it correctly and understanding the legislation the way it is. Now, remember that JobKeeper in its original form was thrashed out pretty quickly, and because the pandemic was right hitting us and we weren't sure what was happening, we weren't sure what the cure was going to happen, we weren't sure what was going to happen in the world. It felt like world as we know it was never going to be the same. Here we are 6 months later, and the fact that you guys are probably still listening to this, that your business have gone through. We have created a bridge. Whether with the other side just yet, we're not sure. What happened to my clients down there in Victoria is that July, August, things happened down there, and let's not get into the politics of it, but we had a second phase down there. Yes, we had a little one in Queensland, and New South Wales had a bit, but generally speaking, I think we all agree that Victoria, being in lockdown so firm, experienced it like no other in the country. So what happened is that as people were starting to get the businesses up and running again, March was really bad. April was pretty bad. May, June, we started coming back and doing alternatives, and we were working with clients and our hospitality clients pushing into takeaway. JobKeeper was starting to come in at subsidised wages. Manufacturing was still working. We still had the building industry making money and doing things. So there were people in May, June that were doing quite well. Now, if you think about Victoria, July, August, September, that quarter has been drastically affected during the lockdown scenario. So just as those businesses were going high and back down into the pandemic and then actually starting to increase again, they were hit by a second close down or lockdown. So we had the fact that their September quarter was very bad. So when JobKeeper 2 was formulated, a bit more common sense came into it and a little bit more thought. They were actually going to include the June quarter in the test along with the September quarter. Now, realistically, because this is a Commonwealth legislation, we couldn't just say, oh, well, postcodes that start with a 3 have this part of the JobKeeper or whatever. We couldn't do that because it's a national legislation. So I believe what happened is that they dropped the June quarter as a test period and push it to September, which allowed more people to get into it that may need it because they're in lockdown and would potentially be affected by the fact that June was going to knock them out of the whole JobKeeper. So that's happened. So here we are now in JobKeeper 2.0 territory. So do we have to register it? So you clients that are already on JobKeeper 1, let's call it, don't need to re-register anything. It's a matter of doing the tests again. And then if you do pass the test, to be able to nominate and declare your turnover in your new phase, okay, and making sure that you pass all those tests and pay your wages and so forth that you need to. So nothing needs to change if you're already in JobKeeper 1. Some people may have not got JobKeeper 1, but may be eligible to JobKeeper 2. Now, potentially this could be some Victorian businesses, but there's going to be a fair few clients that potentially can get to JobKeeper 2. I've already got one or two that I've spoken to that will get to JobKeeper 2, but failed the test for JobKeeper 1. So that's where we're at the moment. So we're starting to, the first thing you should be doing is filling in those September declarations. Now looking at whether we can do the next JobKeeper. Now, don't be too concerned about have I missed the boat. That JobKeeper phase 2, phase 1 start on the 28th of September. You've still got some time to ensure that we're fulfilling our requirements there. Now, that being that the ATO knows that we are now looking at actual GST, not just projected GST, so they know that we had to get our September quarter figures done, and that's going to take time. And also, we have to pay those minimum amount of wages. So for employees that are, say, stood down, they must get their minimum money per fortnight. Now we've got till the 31st of October to make those additional top-up payments if they're necessary. So we've got some time, okay? Not a lot of time, and obviously I hate saying that out on a broadcast because that means that I might get inundated with questions on the 30th of October, which is going to make it very difficult for our team. So I apologise for making that judgment. That's the law. That's what we're in at the moment. All right. So the first thing we've got to look at to get JobKeeper 2.0, 2 phases. Phase 1, 28th of September to the 3rd of January 2021. And the second phase is the 4th of January 2021 to the 28th of March 21. So there's 2 phases of JobKeeper 2. All right. So again, in January, we need to retest again to see whether we can get the next 3 months. So this next one is only for 3 months. Okay. So what are we looking at? First of all, can we get JobKeeper 2 means, were we in business on the 1st of March 2020? If we weren't in business on the 1st of March 2020, read no further, listen no further. There's no reason to even do anything. Now, that's the first key, right? So I may have started business in July. You might have said, you know what, the pandemic may mean that there's a market for me to make masks or something. So you're going to make surgical masks. You quit your job or you stood down and you started making these masks and sewing these masks and set up a business on the 1st of July or even on the 1st of April, because that's when we probably needed them. No, not good enough. You had to be in business on the 1st of March 2020, trading, turning over, proper ABN, all that sort of stuff. Okay, that's your first milestone. Second milestone: can we pass one or both of the projected turnover test, the original turnover test? Now we're starting to get technical now because you go, well, if I didn't have to be in JobKeeper 1 to get JobKeeper 2, what do you mean by passing the original test? The original test is a little bit lumpy. What it basically says, if you remember, we had to compare a test period, right? So we had to compare something that happened 12 months ago with something that we think is going to happen now. So what we had to do is test current turnover for a prior period with projected income for a period that we thought was going to end. So it could have been, we could have been sitting in April getting JobKeeper, but we're projected for June 2020. So there's a different terminology. In essence, there's a couple of changes, and I'll talk to you about later, but in essence, the test periods aren't too different. So typically, if you're going to pass the test, the original test, you should be able to pass the new additional test. Okay, so again, call me to clarify that. It's you know, how much do you want me to get into detail with that? Because it's pretty difficult to understand the difference between the GST turnover test. Happy to go through that at a later time. But for all of those who want to go into more detail, I'm going to continue without explaining that further. So we got phase 1. So as we know, phase 1, 28th of September to the 3rd of January 2021. So what we're actually testing there is the actual turnover for the quarter. So we're forgetting the months now. So we're looking at the quarter. So we're going July, August, September as a quarter, 2020, that just finished a few days ago. And we're gonna, and the terminology is GST turnover. And this is where a lot of you guys may get confused, because GST turnover doesn't necessarily include money turnover. It doesn't include turnover in terms of other things like rents and interest and bits and pieces potentially, right? So, and also it's got to be based upon your activity statement. So GST turnover, we're comparing the September quarter just finished right now, and we're comparing it prima facie with the September quarter of 12 months ago. So pre-pandemic September quarter. So July, August, September 2019. Now, for 99.9% of the people watching this video, you're going to be in a small business. So therefore, you're going to be under $1 billion worth of turnover. So therefore, you're going to be looking at a reduction between those 2 points of 30%. So prima facie, if your current GST for this quarter, which just finished now, September, is no more than 70% of the September quarter of the preceding financial year, so it's September 2019, then you have passed that test. Okay, it all depends. It's in how you're calculating that turnover, what's included, what's not included, grouping rules, all that sort of stuff. So if you know that you've last September quarter you turned over $100,000, and this September quarter you didn't open your doors, you were zero, then there's a very, very good chance that you have passed that test. But doesn't necessarily mean that you're in. There's a lot more things you got to look at. Employees, have you paid them enough? All that sort of stuff. So they're the sort of things that we'll need to look at. Okay. Then you got phase two. So phase two, which I'm not too interested now because we'll talk about that another time, but that's from January the 4th to the 28th of March next year. And that's going to be doing the same thing, but rather than testing September versus September, it's going to be testing December 2020 versus December 2019 quarter GST turnover. And again, a 30% drop if you're under $1 billion. Okay, so what are some issues that I've brought up? So some issues I've seen is back in the day, again, it was very, very rushed through, and there's a lot of people going, well, how do I just do the best method that's going to give me the best result? If I report GST on a quarterly basis, on a cash basis, can I use cash? But if accrual's better for me, which one do I use? Well, they've made it very clear now. So if you're not registered for GST, you can either use cash or accruals. Most of you people that are going to be looking at this are registered for GST. So you're locked in to whatever way that you report your GST, if it's cash or accruals, that's how you must compare your turnovers between one quarter and another quarter. You don't have the luxury of picking and choosing there. The other thing that you need to look at is the sale of capital assets, okay? Because now we're looking at current GST, we're getting technical again, but if you have sold a car, a business car, or some equipment, or got rid of stuff because business is not going so good, so hey, I'm going to sell that van, or I'm going to sell those pieces of equipment. That turnover now is actually included in your turnover to compare. So last September, you might not have sold anything, but this September you had a really reduction in turnover, but to make it up, you've sold some assets. And that's potentially going to kick you over that 30% threshold. So just be careful with those sort of things. Now, the reason why I wanted to shoot the video today was to let you know that if you are struggling to meet those 30% drops on the September, let's call it September versus September, okay, there are some alternative tests because the ATO knows that there's circumstances may change in a year, right? Most times they do. Some clients are pretty clear skating for a while. Some of them have drops, or they have seasonal issues or whatever. Okay, how do we deal with those? So there's 6 alternative tests that the ATO has come up with. Now the first one's a new business test. So, okay, I started my business in, say, February of 2020, just before the pandemic, and you want me to test September 2020, which is past now, with September 2019. Well, there wasn't any September 19 for me to test, okay? So don't get worried if you don't have a test period to look for, okay? If you have a new business, that you had to be in business, remember, on the 1st of March. So if you started anywhere before the 1st of March, before there's a test period, so let's say start in December, then there are alternative tests. So please, I'm not going to go through there in detail because it might not pertain to everyone watching this, but there are tests. Give me a buzz or the team here a call and I'll let you know what they are and how they work. the second one that we need to look at is you may have acquired or disposed part of your business. So you may have had, like last September, you might have had a company that's got 2 or 3 different businesses in that business, and in a company, sorry, maybe in April, so since the pandemic, you decided to sell one of those businesses or dispose of it somehow. Then, therefore, your September last year had all these businesses grouped in, and this September you don't have as many. So, therefore, although your trading's gone lower, because the turnover was so high last September, potentially there's going to be issues, and vice versa. You may have bought a new business, which means that, although you spent more money on a new business, the turnover is irrelevant because you're not testing apples with apples, let's call it. So there might be some issues there. We can look at an alternative test to get you through that. This is one that we use a lot with some clients. Turnover substantially increased. So you may have started your business in maybe last year in September or whatever, but you're only just started. So, as you've seen your growth increase, testing September might have been really poor to test it again. So your September, you might have had a massive, let's say June. But since June, your turnover's gone right down in September. But when you compare this September that just passed quarter to the September of the prior year, when the business manager started, we're still over 30, we're still high. We haven't dropped by 30%. So that's not really fair because you were showing a strong growth prior to the pandemic. So there's the test that we can look at to see whether we can smooth that out a bit to see some consistency and then get you through that way. Okay. There's also businesses that have had natural disaster or drought, bushfires, that it's too hard to compare the 2 different periods. They're not relevant. So again, we have some alternative tests for that. So if you're in that category, you let us know. Now, the one that's very, very popular in the alternative area is if you have a large or irregular variance in turnover. Now, please don't get me wrong. This is not seasonal businesses. So this is not tourism or anything that's a seasonal type business, fruit picking, that sort of stuff, or farmers and whatever. This is just a normal everyday business that doesn't have a seasonal issue, that has really regular income. So it might be a building company, let's say, might be a good example. That building company may have had last September a massive contract that they had to bill out a lot of money in that September quarter last financial year, but they just sort of like goes up and down, up and down, up and down. It just happened that this September they did the same thing. So let's say the prior September in this example was a very poor billing period, September 19. But this September just happened that you ended up billing a contract in 1 month, which means that your September this year, although you're being affected by the COVID issues, it's too high compared to last September, so therefore you're out. So what this does, it sort of tries to smooth in this. So if there's a regular variance of turnover, so we need to look at that, and we've got alternative tests. So just because you think you might be out, don't necessarily think it's 100%. Let's look at these alternative tests. The last one is if you're a sole trader or a partner in a partnership, and you've been sick or you went away or you're injured and you couldn't work. Well, obviously, there's going to be issues there. So you might have had last September that you're sick, so you couldn't work last September quarter. So even if you only did $1 this September quarter, you're going to be out for JobKeeper. So this smooths that out and gives us alternative tests. So they're the things that I wanted to talk to you about today. So I know a lot of you are going, okay, let's look at September, and going, oh, well, I'm out. Please, if there's some circumstances of those 6 cases that I just spoke to you that may pertain to you, let us know. The other thing I just wanted to let you know about too is the rates. Again, this has been publicised quite a lot. I'm going to tell you the rates now, the pay rates. This is for non-business participants. So this is just for essentially employees. It depends on the hours worked in the 28 days before the most recent pay period ending on before 1st of March 2020 or the 1st of July 2020, depending on the eligible employee. So as my prior video said, if there's a new test date, which is the 1st of July for employees, that was put in the latest amendments. So those ones there were able to be put in there. So we have an idea that if we could go 28 days before the 1st of July and have a look at how many hours in that period that employees worked, if they worked 80 hours or over, then they are eligible for the maximum pay, or you are eligible for the maximum amount of let's say, subsidy. And if they have been fallen short of the 80 hours, they're just the standard rate. So the rates are in phase one, $1,200 per fortnight. Phase and phase two, $1,000 per fortnight. If you don't meet the 80 hours test, then it's only going to be $750 in the first phase or $650 per fortnight in the second phase. Now that's what you guys get as employers when you lodge your declaration per employee, right? But you need to also ensure that you are paying those employees those amounts at least per fortnight. So if, for example, a full-time employee, you've reduced their hours, but they are eligible for the 80-hour rule that I just explained, and you're only paying $1,000 a fortnight now, you'll need to top them up that extra $200. So the same rules that were in JobKeeper version 1 are same now, but you've got to remember you have to pay them that amount. And you've got till 31st of October. So that's why I said to you right now, we should be looking at getting rid of JobKeeper 1, making sure that JobKeeper 1 is done and dusted, and we're getting that, putting those declarations in, getting the money in the bank the next few weeks, hopefully. But now starting to look at eligibility for JobKeeper 2.0. And just remember that if you don't pass the normal test, let us know, and we can look at whether some of these alternative tests are going to be pertaining to you. So trying to keep it as short and sweet as possible. If you want me to elaborate on any of these points, please give me or my team a call. And we do offering a service, clients or non-clients, to have us review your situation and give you some written information, because a lot of clients are going to be dropping out of JobKeeper 1. That means there's going to be, I think, there's going to be a lot of more ATO service officers now that might be policing to make sure that you're in the JobKeeper 2. I don't know how they're going to do that, but just be careful about how you are looking at turnover, what you are doing with your eligibility, your employees, and if you have any issues with that, we are offering the service to give you a hand on that, and we'll give you an upfront quotation on what that costs, and we'll get it done. Other than that, please call me anytime, and also contact me regarding our business advisory. I'll be doing a lot more one-on-ones with clients or Zooms with getting our business over that line into the pivoting into the next phase of the businesses. So happy to help you with that as well. We're always here to serve you guys. Stay safe, stay well, keep working on your business, and let's get through this together. Thank you very much.